Today we're going to briefly explain the gold to silver ratio, and if you're invested in the precious metals, why it might be a chart you at least want to keep an eye on. This is brought to you by Ainslie Bullion and the Gold and Silver Standard. My name is Joe. The gold to silver ratio is simply the price of gold divided by the price of silver, and you get this ratio number right here. So we take a look at the start of this particular chart. This goes back to, where are we, roughly 1997. And if you have a look here in September of roughly 1997, you can see the number was at 50 on the right hand side here. So that denotes that roughly September, October of 1997, 1 ounce of gold was worth the equivalent of approximately 50 ounces of silver. Now, of course, this ratio number is going to go up and down because gold and silver do not go up and down in lockstep with each other. Sometimes you're going to have periods, and for example, when you see this move up, that means gold is outperforming silver. It's having its time in the sun as such. And when this ratio number, this chart is going down, you're seeing that silver is outperforming gold. It's having its time to shine in relation to gold. Now, gold and silver fiat dollar prices could be going anywhere. They could be going up or could be going down. But in relation to the two metals, gold is outperforming or silver is outperforming as it goes down. I hope that makes sense. And we'll get you to take a look at the relative strength index as well. It basically tracks this right here. But you can see very clearly that gold goes through periods of being overvalued against silver and then highly undervalued against silver as well. And you can see how that tracks very, very easily. So why might you want to know about this? Well, if you're invested in precious metals and you are dollar cost averaging, and maybe you're buying a certain split between gold and silver, maybe you've got some platinum too, but mainly gold and silver, this just might be interesting to keep an eye on. And you might be just buying and holding, and you're not looking at doing anything extra with it. That's okay. It's just an interesting chart to look at, because you can just see, over history, wow, between the period of 1999 to roughly 2003, gold was really, definitely outperforming silver. Oh, look at this. In 2008, just after the GFC, gold spiked, but then silver really outperformed gold all the way down to this area of 1 to 32. And we'll come back to that ratio number in just a second. We'll do a little thought experiment in just a moment. So it might just be as simple as that. And you can just keep a track on, which metal is outperforming the other. To give you an example, as of right now, the gold to silver ratio is at 1 to 90. So for every 1 ounce of gold that you own, it's worth approximately 90 ounces of silver. Okay, and you can see that we have recently broken up through this downtrend line right here. So this goes back to March of 2020. We, of course, all know what happened in March of 2020. That's when there was a lot of economic uncertainty, we'll call it that, and people flocked to gold. So gold was definitely taking center stage at that time. And then after the panic sort of started to wear off, you saw silver catch up in price. And that's why you're seeing this ratio number go down. And then we came back up to test this roughly 95 ratio number right here, back down to this key area of support of 75. All these blue lines I have drawn in are key areas of support and resistance over the long period of time. You can see very clearly right here, very clear resistance level around about 80. That's been that was a big line in the sand for quite some time until 2018, which we punched on through it. And then we went all the way up to here in March of 2020, all the way back down. But now we've broken above this trend line right here. And that just means that in the last couple of months at least, gold has been outperforming silver. Now, that doesn't mean you need to swap all your silver for gold or anything like that. It's just interesting to keep a note of, gold's having its little time, but eventually, silver will have its time again, and we'll eventually see from a certain point, we'll see that number go down. Where that starts to go down from, we don't know. But what I can note for you right here, we're coming up to an area of resistance. This is not financial advice. Nothing I say here is necessarily the opinion of Ainslie itself, but traditionally there's a little bit of a resistance level here at that 93 area. You can see a bit of resistance, a cluster right there as well. So we're coming back to that. Could we potentially, and I'm not going to say either way, but we could potentially, if we break above and hold that, I would say on the monthly time frame, and we hold that as support and we come back down to test it, you could potentially see a bounce off and a continuation up, which means gold is still outperforming silver for at least another few months, for example. But if we do find an area of resistance here and you see this ratio move down, then silver is outperforming gold, and then potentially you could see silver come back down to test this line. Now, a lot of people were talking about silver in the big silver bull run. Now, we had a big precious metals bull run, but in particular silver, and I'll show you right here. So after here is the GFC, and we talked about that just before. This is where gold took some center stage for obvious reasons during the global financial crisis. But during the period of roughly December of 2008 and April of 2011, silver was really the flavor of that time. A little bit of a spike back up, but you can see definitely from 2010, and that's roughly when I started getting into precious metals investing myself. It was around about this time here, and then we saw, and I was in all silver myself, we saw this move in silver, the fiat dollar appreciation in silver against gold, and this is why you see this move all the way down, so very much an outlier. We came down to all the way down to 1 to 32, so meaning for every 1 ounce of gold, it would get you the equivalent, roughly, of 32 ounces of silver. And you can see very clearly that aligns with gold going into the very undervalued territory. So why am I mentioning this? Well, it goes through a bit of a range, as I may have mentioned before. You can see here we go through roughly an area of 50 has been a big support level over a few decades, and this area of resistance at 80 had been an area until we broke that, until I mentioned that before. So there are some people that try to play the gold to silver ratio. Now, we don't necessarily recommend doing that. This is for people who have thinking about it over the very long term. For example, there are people who tend to play in between these ranges right here, roughly sort of 50 to 80, and in more recent times, these ranges of approximately sort of 70 to 90, roughly. Now, what do I mean by that? I'm going to give you a couple of extreme examples of a gold to silver ratio play. And again, if you just want to buy and hold, please do that. Definitely the easiest way to go. But there are some people who, when they see the really outlier prices, swap in between the metals. Now, I'll give you, as I said, an extreme example. This is never going to work exactly. You're never going to pick the extreme bottoms and the extreme tops. But we're just going to use them as an example. Let's say, for example, that you were wanting to purchase silver at the height of the silver market. Now, this is when silver right here in April of 2011, if you take a look right here on the silver price, this is right here when it hit that $50 mark in April of 2011. So everybody was talking about silver in the precious metals market. Gold was doing its thing, but it was all about silver. Now, let's say you knew about the gold to silver ratio, and everyone's talking about silver, and you're thinking, I think I want to invest in silver. But you take a look at this chart and you see, wow, okay, silver's had a really, really big run, and this gold to silver ratio chart is telling me that we are in highly undervalued territory for gold. So let's say you really wanted silver, but you saw that gold was highly undervalued. What you might possibly have done, instead of buying silver, you decided, let's pretend you've done this, you've decided to buy 1 ounce of gold. So instead of buying 32 ounces of silver, you bought 1 ounce of gold instead. Your goal was to get lots more silver, but you saw that gold was undervalued. Now let's say you waited and you timed it absolutely perfectly. So this is April of 2011. And then all of a sudden you saw gold start to appreciate against silver. It's outperforming silver, and you bought gold down here. It's going up and up and up. Your gold is outperforming silver. It had a little bit of a dip here, but you decided to wait. Again, this wouldn't happen in real life, but as an example. And then the thing in March of 2020 occurred, and you saw this spike in gold, a big spike to the extremely overvalued territory. You saw it move up to 1 to 125. That means that for every 1 ounce of gold you own, you could get 125 ounces of silver. And let's just say you decided to sell your gold and buy silver with it for approximately that 120 to 125 ratio right there. Well, you have basically almost quadrupled the silver ounces in your stack versus only buying silver down here. I hope that makes sense. So when you see gold was undervalued, you decided to buy gold. You waited until gold was extremely overvalued, and you swapped your overvalued gold for the undervalued silver. Okay? And you had quadrupled the ounces of silver in your stack. Again, would never happen in the real world. You're getting the perfect bottom and the perfect top. But give you an example how some people do play within those ranges over time, much smaller appreciations and depreciations right there. But some people do that. It's certainly not something you have to do if you're buying and holding for the long term. But to give you an opposite example, let's say up right here at when gold was in its heyday, right there, everyone was rushing towards gold. And you saw, gee, I really love gold, but I can see that it's quite overvalued right now. And I think that it may go through a period of being undervalued towards silver. I think silver is going to have its time to shine. So instead of buying 1 ounce of gold, you decide to buy 125 ounces of silver instead. And then, hey, lucky you, you wait until it starts going down. Silver is outshining gold, and it gets to around about this 60 area, roughly. And you decide, I think that's the right time for me. I'm going to sell my 125 ounces of silver, and I'm doing it at this ratio number here. What does that mean? It means you've doubled the amount of gold ounces in your hand versus just buying gold up here. Now, I hope that makes sense to you. Certainly, we're not saying to play the ratio chart as often as possible as you can. The gold to silver ratio plays, they come just a little bit every now. They come, they're few and far between. It takes many months and many years, because we're on the monthly chart right here, to go through one of those big, particularly one of those large cycles of gold being undervalued to gold being extremely overvalued. We're talking that's a 9-year period. Okay, so this is not for day traders, not for weekly traders, not even for really monthly traders. It's just if you're keeping an eye on the gold to silver ratio over time and you're in both metals, there are just certain really outlying times where having one metal might be a better idea than having the other metal, or at least weighting more of it in one metal than another metal. And of course, there are some people who believe, there are going to be gold bugs who believe that the gold to silver ratio is going to continue to go higher and higher and higher. And in the opposite stead, there are people who are complete silver bugs who believe at some point we're going to top out in the gold to silver ratio, and you're going to see this this ratio move down, and that silver is going to potentially, possibly even come back down to this 50 level, or some people believe that it could come back down to this 30 level. There are even some people who believe out there that it might even go down to, and again, we're not saying this is going to happen, it could go either way, but there are some people who do believe that we may go back to the more of the natural ratio that gold and silver come out of the ground. And at the moment, that's around about a 1:8 or 1:9 ratio. So for at the moment in the mining industry, roughly for every 1 ounce of gold that is pulled out of the ground, roughly 8 ounces of silver equivalent are pulled out of the ground. So some people believe we could go back to that natural ratio. I don't necessarily believe that, but it is a thing. So that's why there are some people who wait for these outlying undervalued and overvalued prices, and then hopefully up their ounces in that way. So that is the gold to silver ratio explained. Hope that makes sense. Post a comment below if you need a further explanation, or if you would like to explain it in a different way. Post your comments below. Let me know what you thought about this quick presentation. Very quickly, as I said, gold slightly outperforming silver at the moment, but just do watch that little area of resistance at around about that 1 to 93. Lastly, if you would like to track the gold to silver ratio yourself. Of course, you could pause this video, take a screenshot, but if you want to check it out live, you could of course do a Google search for gold to silver ratio and find a chart. But if you wanted, you could head over to tradingview.com. That's tradingview.com. Go to the interactive chart section. And what you would do is you go over to this side over here and press the add symbol. This is if you want to do it yourself, and type in gold / silver. Now click on this top one right here. That should come up for you, and then hit enter, and then that should come up for you right there. That is the gold to silver ratio. So if you want to keep a track of it yourself, you can certainly do that. That has been an explanation of the gold to silver ratio. Certainly hope you found that informative. Again, post a comment below, let me know your thoughts. Next week, you will get another usual gold and silver analysis. We may also look at a cryptocurrency as well, because Ainslie has been in crypto since 2017. Thank you very much for watching. Balance your wealth in an unbalanced world. Take care, and we'll see you next time.